Welcome back. It looks like it's going to be a pretty good day of trade. You know, the GIFT Nifty is suggesting a 100-point opening, and we have a lot of positive cues. So let's get straight to it. One of the big positive cues this morning is Tata Motors numbers. Strong numbers coming through, and I'm expecting the stock to be in the green. It was the Jaguar Land Rover business that has done very well this time. So the EBITDA margins have gone up 430 basis points year on year. And the EBIT margins have come in at 7.3% compared to 1% last year. The company has also gone ahead and raised their EBIT margin guidance for the full year to 8% from 6% earlier. That's the kind of confidence that they have in the business. Also, their balance sheet is improving. They continue to expect free cash flows of over £2 billion, and the net debt is expected to reduce to less than £1 billion by the end of FY24. Brokerages are very upbeat. In any case, a lot of brokerages had raised their target prices earlier. Morgan Stanley says it's an impressive quarter. CLSA says the business momentum is very strong. Jefferies says it's a good quarter too and a strong second half outlook. So I'm going with green on Tata Motors this morning.
Okay, all right, green on Tata Motors, but let's focus on Gujarat Gas. Sonal joins us to tell us how did she read those numbers. Morning, Sonal.
Good morning, Nigel. Well, it was a good margin performance and a margin-led beat for Gujarat Gas this time. So margins, they are up 270 basis points on a quarter-on-quarter basis, much better than what the street was working with. Overall, revenues are up 2%. EBITDA is up 33% to come in at 497 crore rupees. Margins, they are higher by 270 basis points at 12.9%. There was an expectation of around 10.1% margins. Profits are up 47% to come in at around 300 crore rupees. Volumes, however, they are a slight miss, but nothing to worry about. They came in at 9.32 MMSCMD versus a Motilal Oswal estimate of around 9.7 MMSCMD. But EBITDA per SCM, a big beat there at 5.8 rupees per SCM. So because of the margin-led beat, expecting a green on the stock today.
All right, Sonal, thanks very much for that. SPARC is the next one we're focusing on. It had a bit of a spark over the last couple of days as well on the back of the news flow. But Ekta, tell us more.
Thanks for that. Well, they updated their investors with regards to their R&D pipeline. So they've said that the year 2024 promises several inflection points when it comes to key drugs in their pipeline for cancer as well as psoriasis. They expect additional non-dilutive cash flows from commercial and partnered assets which they already have and generating income from as well. In terms of cash flow, they've outlicensed a seizure drug in Q4 and they've received an upfront payment of $10 million. They expect milestones and royalties going forward. They've received 703 crores in Jan 2023 against a conversion of warrants. Cash of around 363 crores on its book. A line of credit from the parent is around 250 crores which is in place, and they have shareholder approval to raise around 1800 crores by way of fresh issuances. So maybe we could see some amount of follow-on buying based on the fact that they are very positive in terms of milestones in 2024 for their R&D portfolio.
Okay, thanks a lot for that, Ekta. Well, Mangalam is with us. He has Concor and Sheela Foam on his radar. Mangalam, over to you.
Good morning. So I'm looking at Container Corp because of the Q2 numbers. The realizations in their export business led to their revenues to grow about 10.5% year on year. We also saw, the margins at around 25%. This compares with 25.5%. That decline is largely, operational in nature. The net profit jumped 21% because it was aided by higher other income, which came in at 105 crores versus 43 odd crores itself. The reason why I say realizations are improving because EXIM revenues grew 9.5%, whereas the volume growth, which the company has revealed already, was just around 3.5%. Though there was some reduction in realization in the domestic business, maybe because of the festive season moving into the third quarter. The land license fee, the quarterly LLF rate also came down to around 85 odd crores versus the previous quarter of 130 crores. So that's a mild positive, also given the underperformance that we've seen in the stock over the last 1 month or so. Sheela Foam as well was impacted by the festive season shift and the wedding season shift into the third quarter, where the revenues declined by 10%, the EBITDA declined by 15%, and the net profit declined by 17% as well. For starters, we expect Sheela Foam to be in the red, but will be important to see what happens in the second half of trade, largely because the big trigger of the Kurlon acquisition playout is still underway.
Okay, Mangalam, thanks a lot for that. Well, Vivek joins in to tell us about IEX numbers. Vivek?
Well, good morning. That's right. So, in the context of rising power demand, the short-term power exchanges are seeing significant volume growth, and IEX too has been a beneficiary of that. It's been a steady quarter, strong operational performance from the company this time around. Revenues higher by 14% on a year-on-year basis, coming in at the 109 crore mark. EBITDA is up 16.5%, and margins to have expanded by 180 basis points. Profitability on the back of that is up 21.5%. Overall volume growth for the company in Q2 was over 14%, coming in at 26.1 billion units. Going forward, the company has given encouraging commentary. They are saying that they are continuing to see increasing sell-side liquidity, increasing demand as far as the exchanges are concerned, and there are more sellers right now on the exchanges on the back of the fact that gas prices have cooled off quite significantly. Along with that, the average price of power on the exchange too has gone up. It is now rupees 5.88 per kilowatt hour as far as each unit is concerned, and this is up sequentially from Q2 as well.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm looking at two stocks and expect both of them to open up in the green. One is JK Lakshmi Cement. I'm looking at the standalone numbers because Udaipur Cement already came out with the set of numbers, which is a smaller part of their business. So on the standalone business, you have revenue growth of close to 11.5%. Most of that is because of sales volumes, because that was up by close to around 10%. Approximately, the EBITDA number, though, jumped up by close to around 30%, telling you that margins have done quite well. So after a weakish quarter, the past quarter, this quarter, it's a bounce back. You have margins that expand by close to 150 basis points or thereabouts, which is pretty good news. The profit number as well, that was up by close to around 40%. And the cash flow from operations, well, that's moved up. They delivered close to around 270 crores odd. That compares with an outflow. So that's encouraging because they've managed their working capital quite well. So JK Lakshmi Cement opens up well. In the green, it has valuation support as well. Trades at around $90 per ton. Next up, Ratnamani Metals. Very, very good numbers. It seems a good product mix has played out for them. On the top line, you have a 26% growth. But on the EBITDA front, you have more than a 60% growth. And margins have come in at around 21.6%. The last time I saw these sort of margins or anywhere close to this was 23% is what they delivered in March 2021 quarter. So after close to around 9-10 quarters, we're seeing this sort of a performance. Very, very good set of numbers coming in from them. And in all probability, what would have happened is they have sold a high amount of stainless steel tubes, and also from the carbon steel, well, they would have sold a better, product mix out there. So that explains why things are looking up. Profit number up close to around 66%. Finance cost has moved up on a very, very small base, but these numbers look good. Also, the cash from operations has moved up to around 350 crores from 200 crores. So good set of numbers. Stock trades at around 30 times its forward earnings, but expected to open up well at the green. But Abhishek joins us because he's tracking Mahindra & Mahindra Financial Services. Morning, Abhishek.
Morning, Nigel. So there is a business update coming in for the month of October, and it looks like a festive month has been good for them. So in the month of October, the disbursements were at 5,250 crore, a similar level in last year, October as well, and about 16.7% growth that you are seeing on a month-on-month basis. So this is a 7-month high in terms of monthly disbursements for them. Collection efficiency has dipped to 94% in the month of October versus 97% that they had in September, but this is seasonal in nature. Even in last year, October 2022, the collection efficiency had dipped to 91% versus 98% in the month of September 2022. So it's a seasonal in nature. Year to date, the disbursements are at 30,725 crore, up about 16.3% YOY. The asset book has grown by 2.3% month on month. Stage 2 and Stage 3, which is loan overdue between 60 to 90 days and above 90 days, they have remained range bound to the Q2 FY24 numbers. Liquidity chest in the balance sheet is over 2.5 months, which is similar to the levels that we saw in September as well. Back to you.
All right, thanks very much for that. That's another stock which has taken a battering after the last quarter numbers. Abhishek, thank you. Religare is the next one we're focusing on. Upasana's got details on the numbers here. Upasana.
Well, Religare Enterprises have reported its Q2 FY24 numbers, and from the face of it, numbers look sequentially weak right now. The revenue stood at 1,585 crores with an uptick of 23% sequentially, and revenue growth was mainly led by broking and insurance segment. While broking saw an uptick of almost 25%, and insurance saw an uptick of almost 24% sequentially, and investment and financing activity saw a downtick of almost 26% sequentially. While talking about the other income, it saw a downtick of almost 93% on quarter-on-quarter basis, and total expenses is where we see a uptick of almost 28% sequentially. PAT has seen a downtick of almost 56%, and it stood at somewhere around 40 crores. So higher expenses and fall in other income have dragged the PAT growth sequentially. So we'll be waiting for more details for further understanding of numbers.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's Tata Motors, Gujarat Gas, SPARC, Concor, JK Lakshmi Cement, Ratnamani Metals, and tubes, IEX and M&M Financial, while stocks with negative news flow, Sheela Foam and Religare Enterprises. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, we are looking at this decline in US dollar index, which seems to be the supporting factor across commodities. But having said that, even with that, this is a week that seems to be ending in the negative for many of these commodities. Crude, for example, is headed for a second weekly decline. It's down 4% this week. Prices did see a decline of 3% in the previous week as well. It has to do with the weak Chinese data and the war premium now coming off into the market as no other countries in the Middle East are joining the conflict and there is no disruption in the crude oil supplies. Also, markets are looking at not so strong signals from the US Fed or even Bank of Japan and Bank of England, and that has weighed onto the markets as well. We have seen a similar scenario coming for gold, which is headed for a first weekly decline in 4 weeks. Markets are looking at Fed fund futures saying that there's an 80% chance of a rate pause continuing into the month of December as well, and that would be a supportive factor.
All right. Thanks very much, Manisha, for that. We'll take a quick commercial break here. Up next, Nishal Maheshwari of Centrum Broking will be joining in for some fundamental stock check. We'll also have Pirosha Godrej of Godrej Properties joining us for their second quarter performance and a chat with the management coming up. Stay with us.